There's something coming, and this is just the very beginning of it. A week ago, I made a video in which I talked about who would be the buyers of gold and silver that will drive it to astronomical levels. And I talked about the millennials coming in on things like the Robinhood app and buying and stuff, but they jump in and out and generally are the ones that will end up with losses. But here we have the other end of the stick. I talked about pension funds and the various types of funds and big smart money. That was on Monday, and then on Friday, it was revealed that Warren Buffett's Berkshire Hathaway snapped up Barrick Gold in the second quarter and sold Goldman Sachs. They sold their whole position in Goldman Sachs, but they also reduced their position in Wells Fargo and JP Morgan Chase. So they're seeing a potential problem in the banking sector, and they're getting out of there, and they're getting into gold. But the amount that they put into gold, it says a position valued at $563.5 million at the end of the quarter, so $500 million. And what's going to happen is, as these pullbacks happen, gold and silver is a reverse roller coaster. I'll get to that in a little while. But it's going to have all of these bumps and dips on the way up. But this big smart money is basically putting a floor under it. On the dips, they're going to be dollar cost averaging in. Nobody's going to come in with $100 billion into gold tomorrow. But this is $500 million right here that they came up with. And it's a very, very small percentage. If you take a look at Berkshire Hathaway's allocation, they're heavily into Apple and Bank of America, which I imagine they will be reducing soon. And a lot of that will be flowing into some of the mining companies. Years ago, Warren Buffett had the largest position in silver. It was 129 million ounces of silver, and then sold it. I would imagine but they didn't keep track of it here. It was covered in petty cash, 129 million ounces out of their petty cash. But here we have $202 billion is the total allocation of all of their positions. And you see Barrick Gold right here at 0.28% of their portfolio. And this was $500 million. So they're probably you're going to see in every one of these reports. What's interesting is Warren Buffett used to call gold a pet rock. You dig it up and refine it, turn it into, you dig up these rocks, refine it, turn it into a pure rock, and then you sell it to somebody who's going to bury it in a vault somewhere. And so he called it nothing but a pet rock. It doesn't generate income or interest. And here he is investing in Barrick Gold. So he's investing in pet rocks in the ground. So there's something coming. And this is just the very beginning of it. But what's going to happen is, on the way up, there's going to be a higher and higher floor set under gold and silver. It's going to be a roller coaster, like I said. Now, go get my book. It's free. Got to give that a pitch. But, roller coasters typically, they haul you up to the very highest point, and then you're just freewheeling, and each one of the peaks is lower and lower and lower, and the pullbacks, the dips between the peaks, are not as dramatic, and then eventually you end up like at the lowest spot and come to a stop. Gold and silver are a reverse roller coaster. We've just been through, if you think this pullback was dramatic, there's going to be something out there in the future that's really going to be breathtaking, and the trick will be to keep on this. And what I'm doing is I'm watching certain things like the Dow-gold ratio, the ratio of gold to base currency in circulation, the gold price to base currency in circulation, the amount of gold at the U.S. Treasury times the price compared to currency in circulation, compared to M2, compared to base currency. And then one day, the smart money will start getting out. So it's this reverse roller coaster. Gold and silver will go into a peak one day, and the smart money will get out. And the dumb money that all comes in, because the people that come in right here, those are the people, like in 1980, those were the people that in January of 1980 started lining up at coin shops and bought gold at 850 and then rode it for years down to, eventually 250 in the year 2000. And so the same thing will happen again. The people that, it's not you, you're the people that are listening now, before the smart money, the big money gets in. And when the public, the unaware public, just wakes up, when people are just rushing into gold and silver, and they get in line and they buy, then the smart money is going to sell, and there's going to be what's called in the stock market, it's usually a distribution dome. With gold and silver, they're opposite. Because they are where people run to when everybody is panicked, they tend to have very sharp peaks and rounded bottoms. The stock market has V-bounce, sharp bottoms, and rounded tops. And so the stock market develops a distribution dome. But right on the way up, the people that are going to be selling to the panicked public that's rushing in right at the very end is this smart money, and then it'll take this enormous plunge afterwards. And the people that weren't aware and didn't get prepared, they're going to end up holding the bag. So I'm going to talk about the commitment of traders again. And what is interesting is that during this big run-up here that we saw over the past few weeks before the pullback, this big run-up, they didn't get more short. They were reticent to increase their short positions. All they want to do now, I think, is on this pullback, especially if it goes a little deeper, they're going to be covering these shorts and getting ready to let gold and silver run. This is that's gold, and here's the silver commitment of traders report, and they were actually covering from the lower levels just a tiny bit. The big bullion banks here, the commercials, they're getting slaughtered and they're losing billions. And so this pullback, they're going to be using this to cover their positions. Like I said, they come out, they know what all of the positions are on Tuesday, but they don't release the information to the public until Friday. They keep it confidential, I suppose. The insiders are the people that get to use this information. So that's the commitment of traders, but look for this on this Friday. The next report will be out, and this will be covered a lot more. Now, I was looking at gold and silver here, doing some technical analysis, and what I've put up here, this is the RSI indicator that shows whether gold or whether something is overbought or oversold. And it was way overbought and due for a correction, and it's getting that correction, and now it's back into the middle range here where it can run either direction. So it could go up, it could go down. The red lines here are called Bollinger Bands, and when the price action goes one way, the Bollinger Band expands to the opposite direction also. And so it sort of predicts, you can see the price action was pushing, it was outside the Bollinger Band, pushing this wider, and this got wider, and then when things stabilized, it tightens up, but it very often, when it bounces back, it comes back to the other side of the Bollinger Band. So during this pullback, it could come back to the other side of the Bollinger Band, but it's not going to, drop all the way down here. The Bollinger Band is going to be meeting to rise it. Now this is the 50-day moving average, the blue line. The red lines are the Bollinger Bands. Blue line is the 50-day moving average. And watch what happens when I put a trend line in here that goes under this. Now, the 50-day incorporates a bunch of days of this lower price information. As the 50-day, as we go forward, we add a day to this end and drop a day off of this end, and we do that every day. And so that 50-day moving average will be rising to meet this trend line, and the Bollinger Band, unless we push up above it, is going to continue pinching. And so this is something I call like a triple magnet. Now, another thing we can do is we can put Fibonacci retracements on here and see what it is predicting. We go from the trading range there to a high, and what you're seeing here is that the 61.8 retracement is converging with the trend line, the 50-day moving average, and the Bollinger Band. So now we've got a quadruple magnet. If I use this level, we have the 50% retracement, and if I use this level out a few weeks from now or a month from now, we would have the 50-day, the Bollinger Band, the trend line will be up at the 38.2% retracement. And that is 2260, it says. This one on the 50% is saying 2207. This one is saying, if it happens sooner, if it takes a big drop, 2196. However, these big boys, these big companies that are coming in, the big funds, the smart money, they're going to be setting a floor under it each time. So once it does this roller coaster pullback, it's up to the next highest peak and rollover. So we're in for quite a ride here. I hope you're all taking this ride along with me. I don't give any recommendations. All I do is I report on what I see and I tell you what I'm doing. I want to thank you for watching this. If you got anything from it, please like it, share it with everybody that you can, give it that thumbs up, subscribe to the channel, and we'll see you next time.